Hello, welcome. It is January 11th, 2021, and we have a move higher in the VIX today. Could that mean a change in the momentum? Let's get started. This is not investment advice. We are not investment advisors. We hold no registrations or licenses. All right, everyone. So what we had today was an interesting day. Last week, at the end of the week, we had several very bullish days, and we were closing at all-time highs. It would be a really healthy thing to have a nice brief pullback or some sideways digestion and consolidation. And it looked to be that was all that we had today. There wasn't really big signs in the S&P 500 of true selling that was happening, but the NASDAQ is a bit more concerning, and we'll get to that shortly. The S&P 500, if you take a look at it on a 5-day chart, while we did have a gap down, we still closed within the range of last Friday. So really nothing there that was overly bearish, just a routine day that was just pulling back slightly and consolidating our upward move. However, the NASDAQ, while it still is just consolidating the move from last week, there is some concerning findings here. There was some news that came out over the weekend with prominent social media companies eliminating apps, and because of that, we saw a lot of negative pressure across most of FANG. So let's take a look at Facebook. Facebook finished the day down $10, and the chart itself, as we've been talking about it, it hasn't looked very healthy. It's just been going sideways. And this looked to have been a pretty clean move lower. We're well below the 20-day and 50-day moving average. And if we still see continuation of this move lower with the NASDAQ, then 246 or at the 200-day simple moving average looks to be setting up as the next potential support level. So I think that if we see weakness in the NASDAQ, that targeting Facebook down to 245 with put butterflies would be a reasonable choice. Apple still remains relatively strong. Looking at it with respect to its downtrend line that was coming in from the end of December, we're still holding above that. However, today we did close below the 20. So we've got to wait to see if there's going to be further confirmation of this moving lower to see if there truly is going to be a change in the tone. Overall, I still maintain positivity on Apple. They are going to have earnings here at the end of January. They have a lot of positive catalysts that could be showing for them to be showing strength. So I would hope that we could see strength in Apple getting back to the all-time highs even before earnings. And to me, that would be a nice signal to say that this is likely going to break through 138 and go higher. Netflix continues to consolidate in this sideways range, and here it's getting some support at the 50. However, we've had a close today below the 50. This is a little bit concerning as well, looking at the NASDAQ, because if Netflix is showing weakness along with these other names, its next potential support could be at 475. So what we will do is we'll keep an eye on things. If we see the NASDAQ weakening again and further, then Netflix targeting 475 as a first point would be a good choice. Amazon is ill, and I don't mean that in the positive way. It's been behaving very poorly. There has been a slight uptrend going back to November. If you draw this uptrend dating back to November the 2nd, the lows of this consolidative move have continued to be supported. However, we have now had a breakdown below that, and Amazon to me looks very concerning that if there is truly confirmation of further movement down in the NASDAQ with this elevated VIX, that Amazon targeting to 2,900 is a very real possibility. It hasn't shown much strength with any of these new all-time highs that have been set with the NASDAQ. And this looks very concerning to me as far as to the downside, that it could be one that would be looked to for a play to the downside. Microsoft, this is still going sideways. There's really not much to say there. Tesla, we now know, is a big part of the S&P 500 and the NASDAQ, and that had a 7.8% move lower today. In the grand scheme of things, that's really nothing because it's just been parabolic here for the past several months. And it just going sideways would be positive for this upward move. But if we saw a swift retracement back down to 695, then you could say that this could have been a blow off top. The chip stocks, they look to have woken up. There is CES this week, which is happening virtually. And a lot of these companies are going to be coming out with positive tech news. NVIDIA had a huge move higher today. It had a high of 558, and that looks to be clearing its short-term upper resistance level, which was right around 550. We closed below that, but what we need to keep an eye on is if the chip stocks are truly waking up, then NVIDIA, they've done excellent work with their new graphics cards. They've raised the prices for that, but it doesn't matter. Everyone's still been buying it. They're sold out anywhere you would want to look. Resale is really high. So their products are extremely in demand. And I don't see any way that they wouldn't have a blowout earnings as well as calling for an upbeat guidance here for the next year. So NVIDIA targeting its prior all-time highs of 590. So one potential play for that could be to eliminate the extrinsic value and purchasing late into January a 500, 600 call vertical. It would be about $40 to $45. However, that would eliminate the extrinsic time value. And then if there truly is a move higher with NVIDIA, then that could be one that's going to be targeting its prior all-time highs. An alternative could be a 550, 600, 650 call butterfly, and that would certainly reduce your debit. However, you do have extrinsic value in there, and that there is a time component with 550 still above us. Google showed a pullback, and its pullback was interesting in that it came right down to the confluence of the 20 and the 50. However, it did close below this downtrend line going back to November. It is overall still in this consolidative range, but what we need to see is to see if there's going to be further confirmation one way or the other. Again, what we have is above 1800, then we target 1840. Below 1700, we target 1650. Other chip stocks, looking at AMD, this was really strong today. It took out its prior all-time highs and it went to a new all-time high of $99. AMD is incredibly strong. Every single one of their processors and graphics cards is out of stock as well, just like NVIDIA. They put together a great package. They're being used in all the modern gaming systems. So this is one that long-term, there is significant upside, I feel, and it's just a well-run quality product that this company is producing. So this to me looks to be a nice long, having taken out that. So selling some puts below the recent pullback low of about 89 with a couple of weeks out seems like it would be a decent idea, and then buying for continuation of this move higher. Looking at some of the other names, if we took a look at Zoom is one that had been a high flyer last year with all of the online video chat web services. And this one has pulled back quite a bit, and it looks to be just going sideways right around 350. There's nothing there that I would say is one that you would want to be looking at. Fubo, we've mentioned a few times. This is still going sideways right on the 50. There's nothing there that looks to be consistent with a play. Jumia has continued to consolidate underneath its 20. We have marked at 40 as an alert. Jumia above 40 is an alert for a buy. Corsair, we've discussed that in some of the weekend videos. It does look to have a topping tail on its daily candle. However, this was really strong today. And if the chip stocks are waking up, then this is one that likely is waking up as well. Skills, SKLZ. This is a good name to have on your list. What I would mark is this prior high of 23.89. We've bumped up against that a few times. And if we take that out, then the move is likely going to be higher. So Skills, SKLZ above 23.89 looks to be a buy point. IPOE, this had last week come out with the news that they had merged with SoFi, and that's where they were going to go public with this SPAC. And this is consolidating well here at $19. It had a little bit of strength, but this is one that just being long for a long term, I feel is going to be a great play. So overall, what I would say is that the VIX has woken up and we saw a pretty decent move in the NASDAQ lower. The S&P 500 was going sideways, just digesting the move from last week. But FANG looks quite weak. And whether this is all just news driven or truly indicative of selling will be something that we need to keep an eye on. But Amazon, to me, that looks to be the weakest and potentially targeting back down to 2,900 if we see continuation of the NASDAQ to the downside. And I hope you guys have a good evening and good luck.